welcome back to another video. I'm going to be covering trades week commencing the 6th of December, so in this price action here. I hope you've had a great December so far. Whether you're taking trades, learning, and just prepping yourself really for the next year. I'm not going to waffle on too much. Let's just jump straight in. So we can see that this weekly demand is still holding price. So on the 29th of November that week, we had an aggressive move in. It failed to take out this low. And then we can see during the 6th of December's week, we've had an aggressive push up. So if we refine this down to the daily, we look over here, we can see that price built liquidity. Well, it was swept there, but then we swept again here. So if we refine it to this wick, which is a 4-hour demand, you can see that this is ultimately what has held price. And it makes sense because we've had a sweep within this overall whole weekly POI. So bullish pressure from here does definitely make sense. Hence why some of the price ended up pushing straight to the upside. On the daily, before we move forward, like this was the structure, and we broke structure here. There's nothing really too else in here. So 4-hour cleans this whole area up. So in the 4-hour, go over here, we can see this last sell to buy price action at price respective. And then within here, we can see just before the break of the daily low, we've had this really impulsive move. So I always had in the back of my mind, price could come and respect this level. And then this also reacted from something within here. So justifying this reaction before the push through. So we had the last reaction push through, this mitigated this, then we drove through. Then above that we have this, which reacted off of this wick here. So you can see that coming into, well, the week just gone, why price targeted this level. And then further down here, we can see like price left equal highs here. So this, I was in my outlook, so I was saying that this is probably inducement for the POI above. The week actually started around this point down here. So we can see during the week, like this would be the 4-hour chop here, because price pulled back here before pushing down. So this is a change of character here. But still knowing that we have this whole buy to sell range here that price could react from. However, in the back of our mind, we always knew that these highs could be run during the week. In considering we'd come down and mitigate the extreme point, it does make sense why it done that. So yeah, overall, high time frames are bearish, but we've come into a really key demand area, which validates longs and shorts really. You have this area here before this push down, and then there's some stuff within here as well, but we'll see this on the lower time frames if I just drag this out. So if I hide price up until Friday, I'm just going to do this all in hindsight. I think it's easier for myself, and it's easier for myself. I can speak more clearly, so get my point across better. Actually, let's just remove this for now. So coming into Monday, you can see that we've come into this extreme demand area, and then price has, we've pushed down, and then we've chopped to the upside or break structure. Is this big enough? I wouldn't really be classing that as structure. However, we can see there's been a change of order flow at this point here. We pushed up, broke, the price has come back down into something within this demand range. And then again, we can see, so this was just coming to London session. I didn't manage to catch along in here, but it definitely made sense. So this reacted to something within here. We've pushed down, we've taken liquidity from this little short-term low within here, and we've mitigated this demand. We've pushed up, a breaking structure again, and then price has just done a little loop round, fill in the void within here before mitigating this, doing a little internal change of character before pushing to the upside. So my first trades were taken within this PA here. So we've started to see bullish order flow up to the upside. So from this point we've pushed up, and I was looking to see where I could get in long. Everything in here I looked mitigated. There was no like inefficiency or imbalance in price. Like if you think of this fractally, we've reacted from something within here, we've pulled back, we've pushed through, this wick's come down and mitigated this. So the last real point is this area here, before the explosive move to the upside. This is a weak high, unless it breaks this low down here. So that would have been my targets for longs. Then if we jump down into the 1 minute within here, we can validate the area even more. So we're reacting from supply. We've had a sweep before the aggressive move to the upside. So first of all, I did have a limit set here. So I believe it was about a 3 pip stop at the time. Yeah, so it was. And then I decided to remove my order and just look for a confirmation. And then, as you can see, like I took a 1% loss on this. And this is why they say never trust the first mitigation. So we've had the first mitigation here. We've had a reaction to supply. This wick here is taking liquidity from this lows, mitigated this. So I was looking to get in anywhere within here. Like in hindsight, you can see that this isn't something that I would preach. Like this isn't a clear and obvious trade to get involved within. However, yeah, this is one that I took. We had a break of the low, and this is a change of character. We had a little interaction here. Price pushed down, swept liquidity from here, pushing to the upside. This I was seeing as inducement for the POI below, and then after I was tagged in, like my break-even point would have been here, and as you can see, it just trickled down before then committing to the upside. So that was a 1% loss. And then moving forward, I'll hop back out to the 15. We can see that supply was holding here. We've had reactions to it. We've pushed down and then we broke, like we pierced through here. And I also had this POI marked on to the left, which was all I was expecting was a reaction from this point. I was just like being aware of it, and then there was probably I had this area marked up as well, but with my whole chart would just be a red box if I had that. So I was just waiting to see what type of price action we got when we got within here. But anyway, so now we're seeing clear bullish structure and order flow. We've pushed up, reacted, and then pushed through. And in 1 minute, we can see if we break it down. So if you was to take like a counter trend long from this high, even though it's a weak high, like where would be the place? So you can see we've had a base, we've pushed through, we've had a reaction here to this wick demand, and then we've pushed down. The price has then come back up into where you would, in theory, like say we was pro trend, like bearish, like in theory you would probably look for a trade here. It didn't really sweep any liquidity, but it's a valid area. So then once price pushed down, we've mitigated demand down here, and then we've pushed through and failed. I was looking where was the last point before the failure. So to me, we've started to see this demand chain here, before the push up. We've got internal range liquidity here. We've taken liquidity just from this little short-term low here into the mitigation of this demand. So then once price came back into here, our market executed. I got a bit of a rubbish feel, but it was a 2 pip stop just below this. And then my break-even point was at the high that caused the pullback. And then I partialed 90% of my trade once we come into that reaction point that I said to the left. So that was that trade. So that was 5.65 R, like 90% of that. So I'd taken 1 loss and then this win. And then I was still holding a bit of this. And then once price come down, it took me out. And then I was looking to see if I could go short, because this was quite an aggressive reaction. And it looks quite clean price action up here. So we've had the sweep of the high here, push down, we've reacted from demand. When we've reacted, we've failed to like sweep any liquidity. So I was seeing these bunch of highs as inducement, or the liquidity to be swept. And then I put my entry just above it, covering this high. So basically the extreme point. Like in hindsight, like the return to zone consideration, we've aggressively pushed down, taken out these lows, but this extreme demand down here failed to break. Therefore, it's probably not the best trade. Because if we look at this like from a 15-minute perspective, so 15-minute will look like this, just one push in, one push down, and then push through. And then like this is the extreme of the reaction leg that caused the flip, which is why it ended up holding. But yeah, so that was another loss. But yeah, I had everything that I wanted, just the higher time frame context wasn't correct, which is why the higher time frame is more important than your entry, because the entry can look clean, but if it's in the wrong direction to the higher time frame narrative, you're just going to keep taking losses. But yeah, that was my Monday. So yeah, moving forward on to Tuesday. So coming into Tuesday, what was I seeing? So we'd come into this supply zone, which I had drawn over from here. So this low caused like this high to break, and then you can see prices basing here. We had a strong reaction here, we've pushed up, we've swept liquidity just here, and then prices come down, reacted before then like continuing to the downside. I believe it came into this 5-minute within here. So I'm not trading off this directly, I'm just seeing like where it can provide a reaction. So I had this and I had something within here. And then on the 1M, I did go against my plan a bit, because usually if we're so bullish, I'd wait for the 15-minute shock, which didn't happen until here. However, again, like we had really clear price action, and as like Blackwatch talks about, we had a build up. We've had a sweep of these highs into the mitigation. We've pushed down, we've had a sweep within the reaction, we've pushed through, and then I think I just got a bit of FOMO, you know, and I had a limit set on here, like this is my entry point, this top place where it swept liquidity and caused a failure of demand. However, I saw these buy to sell wicks, so I just entered here and just covered the high with a 2.5 pip stop. So then after getting entered in here, once we broke this low, I was at break even, and my targets for these trades were somewhere down here within this build up here. Mainly because at this point in time, like the 4 hour, like this could have just been push down, push up. This could have been the lower high for another push down. And then, given that we then got a 15-minute shock after that, I was saying, yeah, this is looking good. And then after the shock, we've pulled back, taken me out for break even, and then we've mitigated the area that I would have looked to enter on to start with. So after mitigating that area, you can see we started to build a supply chain to the downside. We've taken out this demand, we've taken out this low, and then again I just entered off of this doji candle that caused this low to fail, and it was part of this whole supply chain. Again, in hindsight, this probably isn't a trade that I would take. Like, this is the cleanest one over here, like the actual risk entry here. This, I could say to myself that this is probably a bit of FOMO. There's like the trade idea made sense and everything, but I've entered where I should have entered here. And at the end of the day, I got lucky, got 2 break-evens on these in the end, as you can see from this. So it came back up and took me over break-even. And then ultimately the price just started pushing to the upside, back in alignment with this bullish run that we've started from this extreme point down here. So yeah, we do make mistakes. We do get emotional sometimes, in terms of we do still get FOMO. It's just about managing them and taking any lessons from it and moving forward, not letting it affect you. But yeah, so that was Tuesday, 2 break-evens. So for the week I've got 1 win, 2 losses and 2 break-evens. Doesn't sound very good, but I think at this point in time it was like 3% gain. And if we continue forward into Wednesday, so we can see now during that Asia session we're still just bullish. Like, there was probably some really nice trades in here in New York. There definitely was. So demand chain, mitigation, push up. Again, we broke structure, we pulled back. We're now respecting this supply. Broken supply. Now we're reacting. And then we broke through again. So then what I was looking at is I had a limit. I don't know, my boxes dragged across like that. Oh, there we go. So the first trade on Wednesday, like, to me, I was looking at this. So we've pushed up, we've reacted, we've come down, and then though we can see, I'm going to delete this for now because I didn't have that. Yeah, so I was looking at this as a sweep within the reaction before the failure. So then I dragged the thing across and I had a limit set on here of 2.5 pip stops, and unfortunately I was tagged out here. So this is, I believe, in Brian's most recent videos, when you have like a 15-minute POI and then you can break it down to your entry model, which is this essentially for the continuations, where you have a push up, you have a build up, like you have a reaction from supply, and then you have a sweep before the push up. Like, that is that. If you have that within a 15-minute POI and you've built the confidence to do so, you can set limits on them, because they usually are pretty good levels, especially if you're following the hard type of narrative. And we've been like extremely bullish up until this point. You can also, if you look here, you had an impulse corrective move down. The momentum's still firmly to the upside. So after taking a 1% loss here, I was just looking to see where I could get in long again. So I was just waiting for price light. I would like to enter that the extreme again, but we can see here we had a sweep of this low, and then price has broken back above. So I was only really looking at this extreme point. Like, anything within here I was seeing as inducement, the sweep essentially. And then once price pulled back down into this, I had my limit set there, 2.8 pip stop, and our break even point is at the high that caused the pullback into entry. and I was at break even once it wicked the high here, and you can see these little POIs drawn across. It was just from demand change essentially, and this extreme point here, we had a nice reaction from that one. Yeah, taking out the break even there, and then it comes into the extreme point, but I wasn't around at that point in time, and you can see what happened after that. And again, this trade right here, or this price action right here, is the entry model. So then when you see price come back into it in future time, it's likely to hold weight. So yeah, that was my Wednesday. I'm just blasting through these trades, but there's not really too much to go through on them. Yeah, so that was Wednesday. And then again, we're still just following bullish order flow. What we've been extremely bullish from Monday, Tuesday, Wednesday, and now we're getting close to this big 4-hour POI up here, so we could start to see stronger reactions for pullbacks essentially, and then ultimately take out these highs into this POI here. So yeah, if we just keep following the 15 minutes to the upside, you can see that we've just completely just ignored this level to the left, taking out these equal highs straight into the POI, which was the 4-hour POI that caused the daily low to fail. So now we can definitely see a stronger reaction for a pullback, and then we have these levels down here unmitigated. That was part of this previous chain, and then all of this is probably inducement, and then obviously these two levels here. Failing any of them, it's probably going to come down to something down here, but that remains to be seen. So coming into, is it Thursday now? Oh. So we can see that price mitigated the 4-hour originally, then we've pushed up, we've swept external range liquidity before now the pullback to the downside. London session started up here. I didn't see any trades until down here. You can see that we've come to this extreme point, we've reacted and then pushed through like this would made that area fail. So we've had a reaction to this point here, a reaction, push up, failure. Now within the reaction we had a sweep, we've had a mitigation of a previous chain, and again within here we've had like a reaction before the failure. So I wanted my entry anyway within this point here. So once price came in, you can see as it was impulsing in, our market, why is my thing lagging? It impulsed in, and then I set my entry, not set my entry, our market executed with a 2-pip stop covering this high. And unfortunately, I was stopped out for a loss. But this is the clear entry model again, where you've had a reaction and then a failure, you work your way back, there was a sweep within it. It mitigated something, which mitigated something. Like this was textbook for me. Yeah, again, it was just unfortunate that it pierced me out for a couple of ticks. That was the theme of my week. In this week, we're talking about, I think 3 trades took me out by like a tick or 2 before going on and running on for profits. But then moving forward, again, there was some nice trades within here. You can see it build up, push through, failure, sweep these highs. It's just following the chain. And then now we're coming back into this area, which is the pro trend move for bulls. So after mitigating this demand down here, we can see that we took the lows here, we've mitigated here with this point, we've had some sort of flip here. There was no sweep within the flip, so the flip gets swept at this point. We've then pushed through, we've had a failure of supply again here, So then now I set my entry on this with 2 pip stop. My break even point was once this high broke, and as you can see, price pushed up, took me out for break even, swept the previous sweep here into something within this extreme point down here, before then again I think it failed to break the highs, pulled back in, mitigated, and then went. So that was a break even trade. And then I was looking at this point here because this was part of the previous supply chain, so could provide a reaction. And at this point in time, like, it was clear on the 15-minute as well, and this 15-minute had reacted. So it's a valid area, and you can see like the impulsive move out of this area. So we could see a reaction for a quick short-term trade to the downside, or it could continue to run lower, given the fact that we have mitigated the 4-hour POI to the upside, or supply zone above. Like, price could have gone either way, so it's just about being flexible and waiting for confirmations within valid areas, essentially, because you could trade both ways. I have a narrative for long and a narrative for short. It's therefore, you might as well execute on it and just protect your capital. Just get in at good places and when it's clean. So yeah, moving into this trade, we've come into the previous supply zone. We've swept the highs here and then pushed through. So ideally, I wanted to be looking at this extreme point. However, what we can see happened is we mitigated these wicks just at the break of this low here, and then within here we've had a sweep of this little, so price has come down. We've pushed up from that high, we've pushed down, we've come up, we've swept this into the mitigation here, and then you've had mitigation of that sweep and mitigations here, and then at this point here is when we got the push away. So I was happy to take the risk on this trade, setting my entry on this POI here with a 2 pip stop. Seems quite big, but yeah, you can see it was tagged in, and as I break even once this low broke, and I was only targeting 5R on this trade purely because we had just come off of this high time frame level. We're still very much bullish, and this was quite late in the day on Thursday. So as I break even at this point, and then yeah, full TP there for 5R. And I think that was my week done. I didn't trade on Friday. I went away for the weekend. But yeah, that was my trading week. A lot of break-evens, a few losses, and a couple of wins. But that just goes to show, like, we ain't perfect. We do take losses. I missed a hell of a lot of good trades that week, and some of them, it's as if, like, some of you might think that the market's targeting you, but it happens. You get taken out by a tick and then it runs. As long as you keep following the plan, you end up making profit, whether that's on a weekly, monthly, quarterly, yearly basis. Like, I don't even know what the strike rate was for this week. However, we got 1 win, break even, a loss, just what, 33% win rate, loss, break even, so 0, 2 break evens, a loss, and a win. So yeah, it's 2 wins from all of those trades in a week, but it's still profitable. And that should open up your eyes to see that losses don't matter as long as you're taking trades in good areas and just keep following your edge. You will be alright, or more than alright, over time. just manage the amount of losses you are taking on a daily basis, and don't fall into the trap of revenge trading and just keep taking trades, because it can be a bottomless pit of just destroying your account balance essentially. You be professional about it. You've taken 1-2 hits for the day, just zoom out, go onto the high time frames, see if your narrative's correct, and just don't force anything. Delete your POIs from the chart, maybe just take a step back and just remark up. That's helped me in the past. If you're too zoomed in and got confirmation bias, or oh, it's definitely getting short, it's definitely getting short, and then if you just zoomed out, deleted everything for just a couple minutes, and remarked it up, you might have a different perspective on where the market might be going or heading. At the end of the day, just react to what it provides you, wait for clean entries, and yeah, I hope you smash it. But yeah, take care guys. Ciao.